So hi everyone, we're just waiting for more people to join. So we're just waiting on a couple of more minutes to have everybody join, and then we'll get started.
أعوذ بالله السميع العليم من الشيطان الرجيم بسم الله الرحمن الرحيم. Shukran Salam Sagla for joining this Al Tijar Al Rabia presents a webinar on business entity selection and taxation. Abdi Saidna Murtaza Sutrawala, yeah, Houston Tijar Al Rabia member Shu. I'm one of the team leads for the legal team. We're very excited to have Khatija bin Sodawala, who is an enrolled agent with the Internal Revenue Service of the United States. Khadija bin is the mother of 4 kids who range in age, I believe, from a year and a half to about 18 months or 18 years or so. She was brought up originally in Montreal, Canada, and is now a member of the Houston Jamaat for many years. Khadija bin has an established tax practice with over 12 years of experience with her own practice. Her wide range of experience includes taxation, payroll, bookkeeping, reporting of sales tax, and audit of sales tax, working with the IRS, including payroll tax issues. Her past experiences include public audit experience at various CPA firms, as well as a few years as a financial analyst at one of the most prestigious firms in the country, Goldman Sachs in New York City. She graduated from Concordia University in Montreal some years ago and obtained her CPA certification in that same time. She's also completed her CFA level 1, which gives her the finance background as well. She's trilingual, trilingual in addition to Dawat Nizaban. She has certifications as a CPA and is also an enrolled agent with the IRS. And we look really forward to a very exciting presentation today, inshallah. Khadija bin, shukran apawocho.
Okay, shukran. Shukran Murtaza. I'm happy to do this webinar today. It's my first time doing the business entity selection webinar. I know I sent Murtaza Bhai a little bio of myself, but that was a bit outdated. I'm at 5 kids now. I think that was the only change there. But other than that, everything else is the same. So let's go ahead and start. And then Murtaza Bhai, you're able to add on or admit people as they enter, correct?
That's correct. I'll handle that.
Perfect. All right. So again, welcome to the Business Entity Selection and Taxation webinar. Just a quick disclaimer before we start. Obviously, the information that we're presenting here is general information, okay? And your strategy, whatever it is to set up your entity, is based on your situation and your whatever's going on, in the market and whatever conditions that apply to you. And then always seek legal advice, either from your accountant, obviously tax advice, or a business attorney for legal advice, and if or needed, a financial advisor before going ahead and indulging into any kind of a specific processing. All right. What is the objective of this webinar? So the objective is that, we want to come out of this webinar with enough knowledge to know what type of entity you want to start business and what type of entity to form, as well as for existing businesses who aren't sure of what they're currently set up as well as, what to switch into, know the tax consequences of those related entities, and then we're going to touch a bit about budgeting within those businesses as well as your personal life. Okay. And then feel free, anyone, if you have any questions, I guess, to type it into the chat box, and we'll try to answer those questions as we go along. So here are the different entity types that we're going to touch base on. Sole proprietorship, that's a one-person entity. General partnership, 2 or more people. Then there's the corporation, and then the state limited liability companies, also known as LLCs. So let's start with the sole proprietorship. All right, so that one usually is the easiest and fastest and the least expensive way to start a business, okay? It's usually managed by the sole proprietor, who's also the owner, and then pretty much, the least amount of formalities needed, okay? You just have to register the name at the county clerk, The closest to most of us here is the one on Clear Road. You just go in and do a DBA, basically, right? So in this, a sole proprietorship, the owner usually is personally liable for all losses, okay? Except for, and what we mean by that is that there's non-exempt property that could be at risk for seizure. So Murtaza Bhai didn't mention that he's also part of the, well, he did mention he's part of the legal team. He practices law and he's in business law. So I'm gonna sort of ask him a question here and ask him and find out what exactly is non-exempt property. When we talk about non-exempt property, what is that, Murtaza Bhai?
So, there are different scenarios where that applies. Typically, you're talking in the bankruptcy situation where exempt assets would be protected from, judgment, or from, if you have to file bankruptcy, the debtor gets to keep those. Non-exempt would not be protected.
So I guess non-exempt property would be anything other than your home, right?
Yeah, correct.
Am I correct to say that?
Homestead in Texas is different from state to state, but in Texas here, it's your home as big as it can be, and then also like 2 cars, a small amount of cash, and other things like that,
Okay.
and land, depending on
Okay. Now, obviously every state is different, but I'm situated in Texas here. So Texas is a community property. So if you do form a sole proprietorship, although it is a sole proprietorship, everything here in Texas is community property if you are married. So usually half is, your spouse's. So different states have different regulations on that. Okay. Now for a sole proprietorship, you obviously want to act like a business, right? You need a separate business checking account. You want to obtain the separate, licenses related to that business, and obviously business insurance is obviously recommended. All right. What are the taxation effects of having a sole proprietorship? All right. So profits are taxable as personal income. So all of us here usually need to file a personal tax return at the end of the year, right? We're all filing a 1040 return. I always like to joke, death and taxes. Those are the 2 certain things that will happen to you in your lifetime. So this is tax that we're talking about. So when you start a sole proprietorship, you obviously have business expenses that you can deduct. You want, obviously, any kind of business expense, whatever type of entity you are, need to be reasonable, need to be necessary and reasonable. Okay. And what do I mean by that? So I'm just going to give out some examples. Spending $3,000 on Astro tickets for someone who practices medicine, that doesn't make sense, right? Maybe someone who's in the entertainment industry would make sense. So just think of reasonable and necessary. If it's reasonable and necessary, if it's necessary and it's reasonable, then it's a valid business deduction. All right. So where are these net profit or loss computed? They're computed on a Schedule C that's reported with your personal tax return, which is a 1040 form. So that is where a sole proprietorship is going to actually, tally and add all their numbers on that Schedule C, all that they made throughout the year and their expenses, and that gets integrated with their personal tax return, and that's where the taxes are paid. So what are the implications of having wages and SC taxes related to that? So any kind of Schedule C, so any income related to your sole proprietorship is taxed at 15.3%. Okay, very important to know. So remember, when you're making money in your business, when you're a sole proprietorship, remember you haven't paid any taxes all year long. So this is where the tax is going to get computed on your 1040 at the end of the year. All right. You do get a deductible portion of SC taxes that gets computed on the Schedule SC, which is the self-employment taxes, and that adjusts your income. But the general rule is obviously the 15%. Okay. So any business losses. So usually when you're a startup, right? When you operate year 1, year 2, maybe year 3, you're sort of building up whatever business you are, and you probably are going to incur business losses. In a sole proprietorship situation, those losses can offset other types of income, whether it's investment income, capital gains, or other wages actually that you have on your 1040. Business losses from a sole proprietorship, a Schedule C, can offset that income. Okay. When you're a sole proprietorship, you can also have employees. There's no rule that you can't have employees. So if you have employees and offer them benefits, the benefits offered to your employees are deductible. But the benefits that you take on are not deductible, all right, for a sole proprietorship. It's just a little good thing to know. Next is a general partnership. So, general partnerships, usually very useful, right? But what's the rule of thumb here? It's 2 or more, right? If you're 2 people or more, you usually default into a general partnership. Okay, it's very useful to, obviously, the partnership, it's very useful to split profits and losses with, right? You can have a 50-50 split, you can have a 20-80 split, whatever split you want, you can have. A lot of people say be careful on creating partnerships with employees or workers. Why is that? Murtaza Bhai, can you give us some advice there?
I mean, first up in elastic, just a shout out to the last presentation we had done on partnership deeds. So, there's a lot of fine points shariat ne kam and legally on a partnership. So we want to make sure that everyone, whenever you set up a partnership, follows the formalities of a partnership. Obviously, mumineen hoy partners to apne razana sate je karwano hoy che. But to the specific question, it's very easy to call somebody a partner. People say you're partnering with me. If you see like HEB, they call their employees partners, right? But if you have a deemed partnership, then somebody can become a partner without you even knowing. So it's very careful. We have to be very fearful of just calling people partners and acting like you're a partnership. It's very easy to become a deemed partnership.
Right. All right, great. So for those of you who are not in Texas, HEB is a grocery store called Here Everything is Better. So I never knew about that until very recently. All right, so let's go back to partnership. So in a partnership situation, when you're legally formed as a partnership, any of the partners can legally bind the business into anything, whether that's signing a contract, opening a bank account, making purchases, borrowing money, even hiring and firing employees. So regardless of whether that partner has a 10% partnership in interest, or whether they haven't a 1% partnership interest, okay, whether they're 50-50, even any of the partners can basically bind the entity into doing whatever they end up doing. What are the different formalities, right? I mean, in a partnership agreement, there should always be a partnership agreement, okay? That should detail out every aspect of the business. And what do we mean by that? So who are going to make certain decisions, where the bank accounts are going to be held, who's maybe going to be the accountant for the business, just different things. What are the partners going to be paid, how the profits are going to be split. And then, there's different ways of going at it as well. Profits can be 50-50, losses can be 20-80. There's different things, but a partnership agreement is always good to have. And it's very recommended. And I'm sure Murtaza Bhai in his practice does the same thing for every partnership he sees coming his way. Obviously, the business name is also required to be registered with the county clerk, your local county clerk. That's the case here in Texas. I'm not 100% sure for all the other states, but that's the general norm. Now, the liability. So all partners are liable, for the debts of the business. So regardless of whether you did form a partnership, you're still a little bit personally liable for it. So what is the taxation side that we're going to look at after this? It's like a sole proprietorship. A partnership is a flow through, it's a pass through to the owners, okay? The taxes are filed on a 1065 form, okay? That needs to be signed only by one partner. Again, like I mentioned, even if there's 2 partners, one person can legally bind the business by signing off on anything. Let's go to the next slide, which is the taxation slide for partnerships. So as I mentioned earlier, right, the partnership income and expenses, again, a partnership is a flow-through entity, so that the income and expenses actually flow through to the partners, okay? What does that mean? So I mentioned earlier, all personal tax returns, right? We all form or we all file a 1040 return here in the US. And again, all of this is based off of being in the US. Now, when we file a partnership return, it's a Form 1065 that we file, okay? So when you work, you get a W-2. When you own a business, such as a partnership, you get what's called a K-1. Okay, that K-1 then is what you take and report on your personal tax return, your 1040 return. Same as the W-2, when you're an employee, you report that on your 1040 return, okay? So that's why we say that the partnership income and expenses flow through to the partners, okay? So let's say a partnership made, I don't know, I'm going to just say $50,000, right? And there's two partners, they own 50-50 of the partnership, so they each made $25,000 each net. Now, whether that income is distributed or not to the partners, it's still taxed on your tax return. It's very important to know that whether the income is distributed or not, it's taxed on your tax return for that year. Okay, so you could say, hey, I have it sitting in the bank. We're going to reinvest that income into the business and do XYZ, but you still pay the taxes on it. Okay, distributions other than the regular net income that flows through, any distributions basically from the K-1, it's not subject to SC tax that we saw prior on a prior slide regarding sole proprietorships. Okay, we saw that 15.3% SC tax, self-employment tax, doesn't apply here to a K-1 that flows through onto a personal tax return. Okay. Let's see. So the partners are not employees. Okay, this is the wages and SC tax related stuff. The partners are not employees in this situation. So when you're a sole proprietor, you cannot be the employee of your sole proprietor. You cannot receive a W-2, and the same applies to a partnership. You cannot put yourself on payroll. Okay, so your employees will receive a W-2 and be on payroll, but you as a partners cannot be on payroll. So but you can distribute your earnings, right? And you can do what's called in the partnership world guaranteed payments. All right, so guaranteed payments are payments that you receive as a partner of a partnership for services that you render to the business. All right, guaranteed payments are subject to SC tax. All right, so on your K-1, when you get that from a partnership, you'll have regular income that's flowing through, ordinary income. Then you'll have a box that'll have your guaranteed payments, which is also deductible to the partnership. Okay, so they're taxed at different rates, right? Your guaranteed payments will have SC tax related to it, and your ordinary income will be subject to your federal income tax rate, depending on what's on your return. All right, so here we also have such a thing as a limited partner, okay? For a limited partner, they're usually not subject to SC tax, okay? Unless they perform services to the partnership, and then that income that flows through to them is subject to SC tax. Same situation as a sole proprietorship, right? If you incur losses in a partnership, they flow through to the partners. And you do need basis to offset your income. So this is not just, hey, it offsets anything else that's on the 1040 return. Okay, it's a little bit different. Fringe benefits. So if you offer any kind of fringe benefits to your employees, they're part of your guaranteed payments if you're the partner in the partnership. Okay. Again, fringe benefits are healthcare. That's the biggest one. We also have de minimis fringe benefits. They're like non-taxable benefits, which is educational or dependent care programs. Those are exceptions to the rule, but regularly, if it's healthcare, it's part of your gross income and part of your guaranteed payments as a partner. Okay. All right. Do we have any questions so far? All right. I'm going to take that as a no and go on to the second half.
So I had a question on K1 basically. So you can still deduct your losses as in a 1099, right? Or does the K1 have lower tax as 1099?
So a 1099, I mean, if you're a sole proprietorship and you're receiving a 1099, you're subject to self-employment taxes. A K1 is not, you know, when you receive a K1 from a partnership, that's not subject to it depends. It depends. Like the K1 will list all the different types of income that you're receiving. Some of them are subject to self-employment tax, some aren't.
And the K1, the taxes are the same as per the tax bracket of the income tax, right? The federal tax return?
That is correct, yes.
Okay.
All right. Anything else on sole proprietorships or partnerships? Anyone have any other questions? All right.
I have a question.
Sure.
So on a 1040, if a guy is on a 1099, he's earning income from overseas. And in US, if he's a part of he sets up a C corp corporation or an S corporation, and then can he offset if the S corp incurs losses? Can he offset that income, or can it be adjusted in the 1040?
Okay, so that we're getting a little bit ahead of ourselves. I'm going into the corporation world right now. So maybe I'll answer your questions when I get to it, or maybe you can let me know again, and we can focus on that question, and I can help you more on the answer to that. I don't want to just get a little bit ahead of myself, all right? Because I know you're talking about corporations and all that, and I'm going to cover a little bit of that in the next few slides.
Okay, all right, thank you.
Right. Perfect. All right. I'll go ahead and go on to the corporations and the limited liability companies, the LLCs. All right. So what are the main things about both, right? This is for the corporations and the LLCs, right? There's no personal liability. Okay, that's a major benefit of being a corporation or an LLC business owner, right? You're not personally liable for any debt of the business, right? And so creditors cannot pursue you. But be careful here, okay? Because payroll taxes, you can get away from that. Okay, that's trust fund money that you're just taking from employees and paying as a company the employer share of payroll taxes and submitting it to the government. That's a liability you can't remove from the books. That's something that no one will be able to forgive you on. So that's something that you have to remit to the government regardless of what happens to the business. All right. Sales taxes, also something that's due to the state. It's, again, trust fund money. And what I mean by trust fund money is that it's just all you are is a middleman. When you collect sales tax, you're collecting it from your clients and you're remitting it back to the respective government. Okay, same thing for payroll taxes. You're taking it out of your employee's payroll, you're adding in your employer portion, and you're remitting it to the government. So it was never your money, and it was never the business's money to begin with, okay? So that's the big thing. A lot of people going into business don't realize. So just wanted to share that here, okay? Forming a corporation or an LLC is highly recommended if you own non-exempt property. Right? You want to shield the liability from your personal assets, right? If you're going to have a lot of employees, it'd probably be a good reason to set yourself up as a corporation or an LLC. All right? So many things happen with employees. They can get hurt on the job, anything. But you want to definitely shield your assets, your personal assets, from being dipped into. If you have a high risk industry, right? Let's see, if you're transporting flammable assets, I don't know, a high risk industry. that might be a reason to set yourself up as a corporation and an LLC or an LLC. If you're in a type of business where you cannot secure any kind of business insurance, another reason, right, why you'd want to set up an LLC or a corporation. All right. Now I'm gonna ask Murtaza Bhai on this. Hopefully he's still there. Yes. All right. Perfect. So Murtaza Bhai, why does signing a personal guarantee invalidate any protection received from forming a corporation?
So personal guarantee is that the individual who's signing it is saying that they will personally pay for any of the debts that are incurred. So the corporation, usually you see these in leases, but there are other scenarios. If the corporation is signing the lease, they're getting the benefit of it, and that individual is sort of saying, I will take on personal liability. It's really hard to get out of personal guarantees if they're drafted properly. So just beware and try to push back as much as you can, if it's possible.
So I love the lease example. So let's say you start a business and you're about to sign a lease, and the landlord wants you to personally guarantee it. So the lease is under the business name, but you now, as the owner of the business, personally guarantee it. Well, you just invalidated the whole reason for setting up the corporation, because if you go out of business, that landlord can now come after you personally for rent. All right. So some good information here.
But let me tell you this, that it is literally impossible that you could get away with that, because you would probably be struggling to find a place if you're not willing to sign a personal guarantee. That's what I've learned. So
That
it's
is
very
correct.
hard, and same goes with the charge accounts. If you're opening accounts with trades in your business, I mean, without signing that personal guarantee form or letter, you're not getting any accounts. I mean, unless you are willing to pay all upfront cash. So that's something that it's two sides of it's a catch-22 situation at that point.
Yes, I agree. It is a double-edged sword. It's very important for people who, if you're getting into business, just that you realize that even though it's whatever type of debt it is or whatever type of contract it is, to really understand it and make sure to seek legal advice before you sign off on it, and so that you know what the repercussions are. All right, so we talked about corporations and LLCs. Let's talk about corporations, okay? So the owners of a corporation are called shareholders, right? And the shareholders of a corporation can also be managed by directors. So let's see here. I want to make sure I didn't miss anything here. Okay. Shareholders obviously have the right to make, obviously be part of major business decisions. So just because they're shareholders and there's a board of directors doesn't mean they don't have the right to sway a decision here and there. Okay. What are the different corporate formalities when you form a corporation? Okay. You need to file it with the Secretary of State in your state. All right. So every state has an SOS. That's what we call it in our taxation world, right? You need to make sure you file that corporation paperwork in your state, otherwise it's not really valid. Okay. You have to have certificates and formation and bylaws, and and correct me if I'm wrong, with in the state of Texas, as long as they're written on something, you're fine, right? When you file those forms with the state, you have to have a registered agent. Okay, and the registered agent has to be in Texas. There has to be a physical location for that registered agent in Texas. So these virtual offices, that's not going to work. It has to be a physical location. Okay. There has to be books and records of board minutes that must be made throughout the year. Sometimes in a corporation, there's only one person, and unfortunately, you still have to create minutes or some book of records for that one person as well. Now, when you form anything with the state here in Texas, there's something that needs to be filed on an annual basis, which is a public information report and a yearly franchise tax report. Okay, not to confuse the franchise tax from, oh, is that royalties? that we're paying when you're a franchisor, like McDonald's pays royalties if you have a McDonald's location and you pay that royalty to the corporate office. This is something different. I don't know why they call it franchise tax, but that's what it's called. When you're incorporated in the state of Texas, it's instead of a tax return that you file, it's called a franchise tax return you file with the state. And it's an annual reporting requirement here in the state of Texas and most of the other states here in the US. So corporate taxation, C Corp. Okay, there's two types of corporations. We're going to touch on the C Corps first, and then we're going to go on to the next one after this, okay? This is the default entity when you create a corporation. You default always into a C Corp, okay? The C Corp is a different return that gets filed altogether. It doesn't flow through on your 1040 like the other two entities that we had, all right? It's a separate formation. You pay taxes on the profits of a C Corp, all right? Distributions of a C Corp are made through dividends to their shareholders, all right? And then the shareholders then turn around and report those dividends on their tax return. So remember, the profits are taxed, and of those profits, they're distributed to the shareholders as dividends, and then those shareholders then are reporting them on their tax return and then pay taxes on that. And that is the terminology of double taxation that we hear a lot, okay? Because you're taxed one on the corporate side and then you're taxed again when you receive that money as dividends on the personal side, okay? This is a great entity if you're planning to go public, okay? And what do I mean by going public? Is you're planning on selling your shares to the stock market. You're planning on trading on the SEC, Stock Exchange Commission, with the Stock Exchange Commission. So there's no limits on how many shareholders it can be. This is like, you want to set up an IPO and go public. And get a bunch of, liquid assets, cash. This is the great, and this is the go-to entity to go to, okay? Shareholders, obviously, you can have a C corporation with only one person, right? One shareholder who's running the whole show, right? Shareholders who perform services for a corporation, including any officers, right? They're also an employee of the corporation, right? And wages to any employees are subject to payroll tax and withholding. So they'll receive a W-2 from the corporation. And if they're receiving wages, mind you, those wages must be reasonable. Okay, what do I mean by that? So let me just give you guys an example, okay? So you set yourself up as a C Corp and you're an engineer. I don't know why you'd set yourself up as a C Corp. That's why I'm using the engineering example. Engineering's, I don't know, I'm gonna say at least make 100,000, all right? So if you set yourself up as a C Corp and only take 20,000 in as wages, that's not reasonable. Okay, so it has to be reasonable. You have to get into the idea that if you were to hire someone to replace you, what is the going market rate for that person? Okay, that's what reasonable wages mean. Okay, dividends distributed are not subject to SE tax. So that 15.3% we saw earlier on, that doesn't apply for dividends once they're distributed. So you are taxed, but not at the SE. It's not self-employment tax, okay? And then if a C corporation has losses, those are not passed through to the shareholders, okay? So you can't use, if again, a one-person corporation has a loss in current year, they can offset that loss with all their other income on their 1040. Okay, the C Corp return, which is an 1120 form, is filed separately, and that is it. It has nothing to do with your 1040 return. Okay, here for fringe benefits, the owner employees, right, are entitled to the same fringe benefits as the employees. Okay, there's no discriminatory favor of highly compensated employees. Okay, you can't have one kind of fringe benefit for the highly compensated employee shareholder versus the other employees. All right, it has to be available for all. Okay. The next type of corporation that we're going to talk about is the very famous S corporation. I love this one. Now, remember I said, when you form a corporation, you default to a C corp. Okay. Now, in order to be an S corp, you must file an election. All right. So this is something your accountant has to do, or this is a step that needs to be done. And correct me if I'm wrong, Mustafa, do you do these elections in your law office?
We can, but we always recommend to work with a tax specialist on
Okay.
this.
So if you're looking to do an S corp election, the important takeaway from here is that there's a separate election that must be made and filed with the IRS. All right. The income and expenses that flow through to shareholders. This S corp situation is now basically a flow through entity, the same as that partnership. Okay. There's income and expenses that get filed on the S corporation tax return. In this case, it's an 1120S. That's how you differentiate it from a C corp. And then you get a K1. On the S corp, you get a K1 that you then report on your personal tax return, which is your Form 1040. Okay. So the income tax you pay on the net profits of the S corp is, again, whether distributed or not. Right? We talked about that on the partnership side. You pay the taxes on your personal tax return. Okay. Distributions from the S corp are not subject to SC tax. All right. So what does that mean? The big takeaway, and maybe everybody can write this down. If you are forming an S corporation, the owner, the shareholder, okay, needs to take reasonable wages. They can be an employee of the business. They must take reasonable wages. The IRS is going to be looking at that line on that tax return, and they want to see reasonable wages that you took and paid payroll taxes on. And then the rest of the net income is just subject to regular federal income tax on your 1040. You don't have to pay SC tax. Okay. So this is the big, that's why people love the S corporation. Once you've matured in your business and have started seeing a profit, because this is the tax savings that you get from setting up the S corp, paying only the payroll taxes on the wages, your particular wages, and then the rest of it is not subject to SC tax. Okay.
I would like to have two questions over here.
Sure.
First, when they say about reasonable wages, when it is a startup, do they really care on the first year also that the reasonable wages are being paid? Because startup, no, the money is not flowing in, and if the owner takes all the reasonable wages, it's gonna run out of the operational budget. That's one. And the second part of the question is, why do the EA or the CPA suggest that you open a LLC and then file taxes as S corp? What is the advantage of that?
Okay, so your first part, obviously, great question that you asked there, and here's the answer to that. So you are not required to take wages to incur a loss. All right. So if you know you're going to have a loss, so it's really a cash basis, right? Any small, medium owner-operated businesses, right, are always looking at their cash flow, right? If there's no cash to take wages, what we always recommend, don't take it, right? Don't create a loss by taking wages. Okay, but the year where you do see profits, you need to start thinking about that. Okay, maybe you don't know where you're at. Maybe you don't have some way of doing your books. You don't know what where you're at. But at the end of the year, November, December, you're like, oh, I did make a profit. Make sure you take that payroll and cut that that W-2 for reasonable wages, okay? Or maybe you have a loss and then you don't need to do anything, right? Because you're just in the startup phase. So that's a very good question. I'm gonna save your LLC question for the next section, which we're gonna touch upon, okay? So hopefully I'll answer that question then, and if not, you can revert back to me. So we talked about wages. We talked about the employee shareholder of an S corp receiving wages. They must be reasonable. The additional pass-through profits are taxed for income tax purposes, not SC. The double taxation here is avoided. Right? That's the other takeaway from being an S corp versus a C corp. Okay, the losses here will flow through to the shareholders. So on your K1, if you had a loss, and you reported on your tax return. However, you cannot offset the loss unless you have basis in your entity. And so what does that mean? What does basis mean? It's like having, it's a very hard term for us accountants to explain, but basis is like when you buy a share for $100, right? You have $100. If you lost $80, if you only got back $80, you can only offset $20, right? It's the same concept. If you invested in your business and you spent, I don't know, $8,000 and you had 10,000 loss, well, you can only take up to that basis. You have basis of 8,000 in your entity. So you can take a loss of 8,000. It's very hard to explain, but bear in mind it's not just, hey, I have a loss and I can take it. So the first few years, you got to wait until you start making that profit to offset the losses against it. All right. I know this one's a little bit confusing. The fringe benefits on this is that even if you're S Corp, a shareholder employee, you can have, maybe you have your son or your daughter working for you, or your mom or your dad, or your brother. And if you're providing, let's say, health insurance, well, even though they're not officially shareholders, they've become more than a 2% shareholder just by being related to you, and they're subject to be taxed on their health insurance if they're part of the group health insurance plan. Okay, so be careful with fringe benefits here. A lot of people don't know about this, and we've had to amend a lot of W-2s to report this section here. Okay, so basically fringe benefits are included in your income as a shareholder. I heard someone talking. Did someone have a question?
Yeah, I had a question in terms of the basis that you were mentioning. If there is capital that is required to, say, purchase a business, does that become your basis? And then based on what you make or lose, you can incur loss against that basis?
Correct. So capital infused into a business it actually increases your basis. So you're correct in that term.
Okay,
Am I
thank you.
right? Okay.
And asking more on the same point. So if you have incurred more loss than your basis, and you said I can only claim the one which must have put in, like my basic, my initial amount. The other 2,000 in that example of $10,000 loss, if I have put 8,000 on, so I can take the $8,000 loss, but not the 10,000. And so the 2,000, can I do it next year? Can I do it next year?
You can do it next year, provided you had income of at least 2,000.
Yeah, and will it fall in the same bracket as that? So if there was some other losses from previous year, will it fall in the same bracket of the rolling that $3,000 every year, or it will be completely separate out of that?
No, so that $2,000 would offset whatever income from the K1 S corporation that you would have. So let's say that the S corporation K1 that year had 20,000. So now you'll have 18,000 to report, and it'll be the whatever tax bracket that it is for that year. Okay, and this is a very general terminology for basis. So these are great questions. I love it.
I'm just trying to put some numbers in.
Yeah.
So S corporation, basically, the income and expenses, they flow through the shareholders. So let's suppose if you make $250,000 on your S corp, and you take a wage of $150,000, so you pay the taxes on $150,000, and the S corp the $100,000 from, the difference between the 250 and the 150. The 150 is the wage, and 250 is the profit from the S corp. What happens to the 100,000? Do you pay any tax on it or no?
So you pay. So remember, when you have payroll taxes, there's 3 types of taxes you're paying on it. Okay, there's federal income tax, there's FICA tax, which has Social Security tax and Medicare tax. Okay, those are the 3: federal income tax, Social Security tax, and Medicare tax. So on that 150 of wages that you're taking, you're going to be paying those 3 taxes. Okay, so now the residual 100,000 that flows through onto your K1 that gets reported on your personal tax return is only subject to the federal income tax now. Whatever your rate you're filing your return, your 1040. You don't have to pay any Social Security and Medicare tax. So those are what's called the self-employment taxes.
Isn't that true that after 119K, you don't have to pay FICA?
So Social Security has a cap. That's for the Social Security. Correct. So I'm going to move on to some S corp, same subject, the S corp. But what are the confining requirements of having an S corp? All right. So in order to be an S corp, here is the main takeaway. You must be a corporation in one of the states or U.S. territories. You have to be here and set up your entity locally here in the U.S. Okay. Very important. Next one. An S corporation cannot have shareholders who are partnerships or other corporations. Cannot be the shareholders. All right, so I'm going to say that one more time to make sure everybody understands. So partnerships and corporations cannot be shareholders of an S corp. Okay, the shareholder has to be an individual. It could be an estate or a trust, certain trust, but make sure you take that away. You can only have individuals be shareholders. It can be other entities. Okay, you can have more than 100 shareholders in an S corp. Hence why I mentioned earlier, right, the C corp. If you're planning on going, public with over 100 shareholders, that's the best entity to select. But S corps, you cannot do that. Here's the next one, and I think someone asked a question on this earlier, or this might answer their question. Only a citizen or resident of the U.S. may be a shareholder of an S corp. Okay, so you can't be a non-resident alien and be a shareholder. You have to be either a citizen or a resident of the U.S. to be an S corp, to file an S corp status. Okay, there's also only one class of voting stock, which can be voting or non-voting, but you can't have like preferred stock, common stock, all of that in an S corporation. When you file an S corporation. Now, as opposed to partnerships and the C corps, there's no restrictions on ownerships there. So you can have a partner owning a C corp. You can have different scenarios there, but the S corp has that limitation that you cannot. Okay, so what does that mean? If you have a friend out of the country that you want to start business with, this is not the route you're going to be taking. All right, it'll probably be something else, but not the S corporation route. Okay, we have a lot of those come to us, a lot of questions on that. So next famous topic is the limited liability company, the LLCs. All right, I love this because me and the lawyers, right, Murtaba, and you and the accountants, we're always butting our heads with this, right? I always have clients who come to me and they tell me they're an LLC, and I'm like, okay, but what's your taxation behind it, right? So LLC is just a state designation. Okay, it offers obviously liability protection like a corporation. Let's see. Just making sure I got everything and I spoke about everything here. The owners of an LLC, right? They're called members. They're not called shareholders, right? They have, and the members, operate the business. They have control over the business. The members can choose to manage the LLC, or they can appoint a board of managers, or you can have a single member LLC, and they run the daily operations, right? And make the decisions of the business. But let's see here. The formalities here are similar to the corporation, right? You still have to keep, books. Murtaba, can you add some information about what are the different formalities that the corporate, when you form an LLC, that needs to be done from the legal aspect, I guess?
So I mean, each state differs. I know there are people from all over the country. So right now it's very popular. If most businesses register in their state where they're based, but it's very popular if you're not going to be in your own state, to set up in Delaware, Nevada, and Wyoming has also become popular in recent years. The benefits of a LLC are sometimes, and the reason for that is because they offer anonymity. You can be anonymously owned, so people don't, the public doesn't know who the owners are in some states. Not in Texas. In Texas, it's pretty much publicly known. Some states give, you don't have duties that you owe like you would in other types of entities. So many times, like you were talking about, sort of butting heads or the lawyer's view versus the accountant's view. Lawyers tend to like the LLC because it gives a lot of flexibility. But I will say one thing: IRS and it doesn't recognize an LLC. So, Khadija, if you want to talk about that, what that means.
And I love that you ended with that, because that is correct. The IRS doesn't recognize the LLC. So the LLC is just a state designation. But what is the IRS? It's a federal designation, right? I mean, well, the IRS is federal. It's a federal government, right? It has nothing to do with the states. So when you call up the IRS and you tell them, hey, I'm an LLC, well, what are you? Are you an LLC sole proprietor? Because you can do that. Are you an LLC partnership? Because you can also do that. Are you an LLC and set up as a C Corp? Because you can definitely do that. Or are you an LLC set up as an S Corp? All right. When you file that federal tax return for your business, nothing, that's going to the IRS, right? That's going to the federal government. That's not going to the state, right? I mentioned earlier, what is the state filing that we do for an LLC? It's the annual information report and the franchise tax report. That's all you're filing with them. You're not, so what you're actually filing is with the federal government, the IRS, okay? So it's important when you set up the LLC, right? If you decide to be a sole proprietor, if you decide to be a partnership, if you decide to be a C Corp or an S Corp, how does the IRS know what you've decided to do? It's when you file your EIN, right? You state in it what exactly and what type of entity you want to be. And that's how the IRS knows that, all right, XYZ LLC has formed, and based off of their, how they applied for their EIN, it's a partnership. We are going to be looking out for a partnership return. All right. And some of you might not know this, but partnership returns and S Corp returns are due in March. They're not due in April. So if you end up forming such an entity, make sure that you file that return by March or file an extension. All right. The sole proprietor, remember, goes on your 1040. So that's due in April. And the C Corp is also due in April because it's a different company altogether. Do I have any questions on that before I go onto the taxation side? Okay. So the taxation of an LLC, right? Remember I said it depends. If you're a single member, then you defaulted into a sole proprietorship. And that's that Schedule C 1040 that we talked about earlier. If it's multiple members, well, you've defaulted into a partnership. You can also elect to be filed, you can elect to be a corporation or a partnership. Okay, again, that's on the when you apply for your EIN, right? And then if you are a corporation, you have to file that election to be treated as an S Corp, okay? Without that, the IRS will not know that you want to be an S Corp, all right? The wages and the self-employment taxes are treated exactly dependent on how you're set up, right? Sole proprietor, partnership, C Corp, or S Corp. Same thing for the losses. They flow through the members, depending on what you are, whether it's a sole proprietorship, a partnership. A C Corp has its own losses that can flow through, remember? Or an S Corp that can flow through. And the fringe benefits obviously depend on what type of entity you've set up as well. All right, so very important to get with your accountant or any kind of legal advisor to make sure you're doing the right setup with the LLC. Okay, so when you tell your accountant LLC, you better be ready with what exactly you want to do with your LLC. Because for the IRS, under their eyes, it doesn't mean anything. It's just a state designation. And they're the federal designation. Let's just talk a little bit about budgeting here for these types of entities, okay? I mean, what is budgeting, right? It's just forecasting of planned revenue, right? What you're going to spend, say, whether it's for a business or personally, right? It's generally done for a year. And the main purpose of the budget is just to provide a flow of how the business might perform, right, in the near future, and to carry out specific strategies to make sure you follow that budget. What are the different classifications of a budget? Well, you have budgets for needs, right? Rent, utilities, all of that, for savings and debt, and wants, right? You might want to take a vacation, want to save for Ramadan, Wajibat, however that is, okay? Then, what is the importance of it, right? It's for a long-term goal, right? And to help you work towards them, right? To map out your goals and save your money, ensure that you don't spend money that you don't have, to prepare you for emergencies. What is the budget process, right? How do you go about making a budget? Well, you want to set goals, right? What are you expecting? And in a business, you want to start with your key personnel within the business to get that together and to agree on what are the goals for the short term, medium term, and long term. All right. And then, budget for the different expenses that you have, whether it's, rent for your business, marketing costs, all of that. Track what's budgeted versus actual, what you're spending throughout the year. And tracking it is the main thing, right? You want to track what you budgeted and versus what you actually spend. Okay. And then some barriers to, budgeting, inflation. It's a sensitive topic, right? So sometimes people just put it on the back burner and they just, especially if it's a big business, they're like, oh, the marketing department will take care of that, or the accounting department will take care of that. But it's all the departments that have to come together. And they always think that sometimes savings is someone else's problem and not their problem. So those are the different barriers. So that was just a little bit that I wanted to touch upon budgeting. I know it's like 9:32, and I wanted to get this. I wanted to get you guys out before the hour. So that concludes the webinar. I know it's a lot of information. So did you guys? Does anyone have any questions? I also want to thank you for being with us this whole hour. Really appreciate it.
I had a couple of questions. So if you form a trust, does it matter what kind of LLC do you have, like whether S Corp or C Corp, or that's dependent on the type of business do you do?
Okay, so trusts are something that are different than obviously these entity selections, and I'd be happy to take that question off air. I just don't want to. It's not the subject of our. It's not the. It's not one of the topics that we're doing in this webinar, but I'd love to, Mohammed, if you want to get with me personally, and I
Sure.
can definitely try to answer that question.
And okay, thank you. And what's the best entity to actually do business internationally? Like if you want to invest back in Pakistan or India and, merge with a company or something like that, what would be the best entity to get taxes done in US then?
Okay, so if you're talking about partnering with someone internationally, right, within your business, we talked about the C Corp, right? So it really depends on exactly what you're trying to do and what you're trying to achieve. So if it's just a sole, if it's just you that are starting to sell abroad, well, we can look at different options there, and what type of business that is. But if you're partnering with someone abroad, it'll have to be the C corporation.
And just adding to that, there are tax treaties. So it depends on whether you're selling overseas and doing it from America, or whether you're, setting up a local presence in that country. There's a whole topic on tax treaties. So America is with a number of countries, and we're happy to take that offline, or connect you with some Muminin who do that tax treaty advice.
Okay, thank you.
And also in the trust, inshallah, Tijara Rabia will be doing in the summertime a presentation on estate planning and trust. So inshallah, we will be able to hopefully answer some questions of that.
I have a question. What is the difference of forming an LLC first and then registering it as S Corp, or directly forming an S Corp? Is there any difference?
No, because you could form an LLC, and if it's a single member LLC, you become a disregarded entity, which is a sole proprietorship. And then you can start off business like that the first few years. And then once you're ready to, be on payroll or set yourself up on payroll, you can become an S Corp. So there's no specific formalities other than if you're ready to become an S Corp or that is the intention. The formality is, remember that you need to file an election with the IRS.
But you can set up a LLC at the state level or a corporation. And then as Khadija Ben said, you make the election to be an S corporation with the IRS. So you can do either or.
Thank you.
Okay, well, shukran. Khadija Ben, do you have any concluding thoughts or anything else?
No, I just, again, every business has, the respective rules and regulations. Like, for example, if you're a realtor, you have to abide by some rules. So just always be sure, depending on what type of business you're in, just get with your, the professionals involved and make sure you're on the right path before setting up anything. You don't want to set up something and then be like, oh, well, I have a bunch of IDs floating around with the IRS. So just make sure you get with the professional before you attempt to do anything. So thank you everyone for your patience and your time today. And I'm open to any questions or anything in the future.
Khadija Ben, do you want to give your work email or your website so if anyone wants to contact?
Sure.
I'll leave with one quote, a very famous quote from Justice Wendell Holmes, where he said, "Taxes are what we pay for civilized society." And then this was the quote that I loved even more. Judge Learned Hand said, "Anyone may so arrange his affairs that his taxes shall be as low as possible. He is not bound to choose that pattern which will best pay the treasury. There is not a patriotic duty to increase one's taxes." So just leave you there with that. And बस आखिर में दुआ करे कि मौलाना उमर दराज ने दराज थाई अने सकला ने इंशाल्लाह अपने सक्सेस आ दुनिया में ने आखिरत में मौलाना साइन अंदर. शुक्रान सकला में.
Thank you everyone.
Shukran Murtaza Bhai, Khadija Ben, and Tijat Rabia. It was great, and I'm Ganu Sikwami. Shukran.
Shukran.